Recently, President Biden unveiled his spending and taxation plan, known as the American Families Plan, which would cost an estimated $1.8 trillion, and the funds would be used to pay for things like universal childcare, paid family leave, and other educational programs. As part of this plan, President Biden has proposed modifying the 1031 exchange program. Any proceeds from the sale of real estate in excess of $500,000 would be subject to capital gains tax. President Biden has also proposed increasing the capital gains tax rate from 20% to 39.6% for anyone earning more than $1 million. While investors anticipated that taxes would go up, the proposed changes to the 1031 exchange program would be a double whammy for real estate investors. Some of the potential impacts we believe we could see if this change were to take effect are an initial rush to sell, a precipitous drop in transaction volume, a smaller pool of buyers, and less liquidity in the marketplace. Biden often touts how his proposed spending plan will support individuals, families, and small businesses. However, the proposed changes many have suggested are aimed at making sure large corporations and extremely wealthy individuals pay their fair share in taxes, when in actuality, 1031 exchanges primarily benefit individuals and small businesses. In addition, Biden's plan proposes to eliminate what is known as the step-up in basis. This revolves around a property that is passed on to heirs and is stepped up to the fair market value at the time of the investor's death. In turn, the heirs pay no tax on any appreciation in the value, since technically there is no gain. Under Biden's proposed tax changes, estates would now have to pay capital gains tax on any gains. The real estate industry has come out swinging against these proposed changes and are continuing their lobbying efforts. In the meantime, real estate investors will want to consult with their tax and financial advisors to understand how these changes could potentially impact them personally. Interested in learning more about how to possibly maximize the value of your real estate investment? Our team at Perch Wealth would be happy to answer any questions you may have. We're here to help you strive to achieve your investment goals. Contact a member of our team today or visit perchwealth.com for more information. This video presentation is not an offer to buy or a solicitation to sell a security. The video is a discussion pertaining to one or more investment strategies and/or asset classes, and is not a discussion of any specific offering, past or present, of securities. As a reminder, there is no guarantee that any investment or strategy will perform as targeted, and any investment involves the risk of the loss of some or all principal invested. This video contains statements intended for educational and hypothetical purposes only, and is not to be construed as a promise of performance. The information presented herein reflects the opinions of the speakers and is from sources believed to be reliable, but all information is subject to change. Not an offer to buy, nor a solicitation to sell securities. Information herein is provided for information purposes only and should not be relied upon to make an investment decision. All investing involves risk of loss of some or all principal invested. Past performance is not indicative of future results. Speak to your finance and/or tax professional prior to investing. Securities offered through Emerson Equity LLC, member FINRA SIPC. Only available in states where Emerson Equity LLC is registered. Emerson Equity LLC is not affiliated with any other entities identified in this communication. There is no guarantee that any strategy will be successful or achieve investment objectives. Potential for property loss. All real estate investments have the potential to lose value during the life of the investments. Change of tax status. The income stream and depreciation schedule for any investment property may affect the property owner's income bracket and/or tax status. An unfavorable tax ruling may cancel deferral of capital gains and result in immediate tax liabilities. Potential for foreclosure. All financed real estate investments have potential for foreclosure. Illiquidity. Because 1031 exchanges are commonly offered through private placement offerings and are illiquid securities, there is no secondary market for these investments. Reduction or elimination of monthly cash flow distributions. Like any investment in real estate, if a property unexpectedly loses tenants or sustains substantial damage, there is potential for suspension of cash flow distributions. Impact of fees and expenses. Costs associated with the transaction may impact investors' return and may outweigh the tax benefits.